Hey guys, what is going on? Welcome back to the portfolio. Again, I want to thank everyone out there for supporting the channel. If you guys do like the content, if you guys do like the video series, feel free to like, share, and subscribe. And if you are a subscriber, make sure to hit that bell button to get alerts and updates on all new content posted on the channel. For today's video, I thought I would do another dividend capture swing trade video talking about stocks that have upcoming ex-dividend dates this next week. All stocks you can jump into, qualify for the dividend, and then hopefully sell off with a positive swing trade thereafter to not only get a positive swing trade, but also the dividend capture as well. If you guys remember from my prior videos, I only utilize this strategy in stocks I'm more than willing to hold for the longer term. That is buy and hold quality stocks. You don't want to be doing this with a strategy with penny stocks, for example, in which if you were to buy the stock, qualify for the dividend, and the stock starts trending down, you would not be happy holding that for the long term. So these are safe stocks, typically blue chip stocks that have pretty good dividend yields that you can jump into, qualify for the dividend, sell off in a positive swing trade. But if you're not able to do the swing trade, you can still hold these for the longer term and pick up and collect a very good dividend. So having said all that, let's jump into the three stocks here. Two of the stocks I currently have in the portfolio. A third has been on my watch list for quite some time, but I've yet put that in the portfolio. The first stock, as you see up on screen here, is Ford Motor Company. You can see on the bottom of the portfolio here, this is a very large position in the portfolio currently, the largest holding actually, 5,525 shares with an equity value just over $60,650. You can see currently the portfolio diversity, about 35% of the overall portfolio. I've also been doing quite a few options trades, a lot of covered calls, making extra passive income on those shares I do hold in the portfolio for the longer term. So Ford Motor Company, a lot of you guys probably know that it has not done very good over the longer term here. 1 year, quite a bit of volatility. 5 years, it's actually down 18.81%. Stock is very cheap right now. I think this is a very good long-term buy and hold stock. And as you know from my prior videos, it's got a very good dividend yield. Currently, 4.8% on the last dividend payment. The current dividend payment will be closer to 5.5% because, again, the stock has trended down a bit since that last dividend payment. You can see here 3 months at 2.05% in the red. But I still like this longer term. I like it as a dividend stock, and I definitely like it as a contrarian play as well. I think this is a very good company. The truck business alone is higher theoretically than the market cap that it currently has. So if you got rid of all of this business, save the truck business, it's still valued by a lot of analysts greater than that 44.68 billion market cap. So those are my thoughts on Ford Motor Company. The important dates: the ex-dividend date will be on 7/20. Payment date will be 9/4. 15 cents per share for a dividend yield just over 5.5%. So that is the first stock. The second stock is also in the portfolio, Procter Gamble Pg. If you guys have listened to my prior videos as well, this is also a contrarian stock. The market segment as a whole for consumer discretionary has been, consumer staples has been in the red. Procter & Gamble, as you can see here, is up 14.2%. But over the last 1 year of trading, you can see it's down 5.94%. At one point, down over 15%. It has been coming back recently, and I think this is a very good time to jump into the stock for dividend capture swing trade. I think it's a very good time in general for consumer staples to pick up some of those shares. It is a longer term play. There is some risk, but where there is risk, there is reward. And I think there is a play to be made in this market sector, and this is probably one of the stronger companies in that market sector. Again, Procter & Gamble. If you take a look at its stats here, very large company, 199.43 billion for market cap. A pretty good PE ratio currently, 21.086, at least historically. And the dividend yield is very good as well, 3.096% on its last dividend payment. The upcoming one will be 3.6%. Again, over the last 3 months of trading, up 1.89%. 1 year, it is down quite a bit, but again, it is trending up here quite nicely, and I see that continuing moving forward. So the important dates behind Procter & Gamble: the ex-dividend date will be 7/19. The payment date will be 8/15, 72 cents per share for a dividend yield just over 3.6%. And the last stock is a stock I currently don't have in the portfolio, and that stock is Main Street Capital, MAIN. This is a business development company. If you take a look at the bottom, Business development company focusing on providing customized debt and equity financing solutions. So much like Prospect Capital, PSEC, that's the current stock I have in the portfolio. And the main reason I haven't added this one is just because I already have PSEC and I don't necessarily want to add more business development companies to the portfolio. You can see in the middle there, market cap much lower than the other two stocks we've talked about, 2.27 billion, PE ratio 12.771. Dividend yield, last dividend payment, 5.663%. The current dividend yield will be just under 6%. You can see the performance of this business development company. Again, a lot of volatility. It is up 7% over the past 1 year of trading. And over the past 5 years of trading, it's up 93.06%. So it's had some very good success, but a little bit more risky than some of the other more traditional blue chip companies that I've talked about today, Ford and Procter Gamble. So the important dates for Main Street Capital, MAIN, the ex-dividend date will be 7/19, payment date 8/15, 19 cents per share for, like I said, a dividend payment percentage of just under 6%. So those are the three stocks. Out of all three of these stocks, I think Ford Motor Company is the strongest play. It has a contrarian aspect to that particular investment, and it's a very strong company as well, which is out of favor with a lot of investors, which makes it, I think, a very good stock to hold for the longer term. Procter & Gamble is a little bit more risky, but again, consumer staples, I think, will be making a comeback, and Procter & Gamble is probably one of the strongest stocks in that market class. And Main Street Capital, MAIN, if you guys are into business development companies or looking to jump into a business development company, this is probably one of the strongest ones in that market class as well. So again, Ford Motor Company, F, Procter & Gamble, PG, and Main Street Capital, MAIN. All three stocks that you can jump into, qualify for the dividend, and then sell off, hopefully with a positive swing trade just a few weeks after that. But if not, these are very strong companies that you can hold for the longer term and collect a nice dividend payment while you look to get out of a swing trade. So those are the three stocks this week. Not to make the video too long, I'll kind of end it here. Again, if you guys have any great video ideas, please let me know. Always looking for new stocks to research and read up on. If you guys do like the content on the channel, if you guys do like the video series, feel free to like, share, and subscribe. Again, if you have any comments on this video, other videos, please let me know in the comment threads down below, and I'll do my best to get back to you guys as quickly as I can. So kind of with that, I'll end the video, and we'll see you guys next time.